Hey, welcome everyone. We'll start lesson 3. Today lesson will go through LO3. As you know me, my name is Anjum Setter. Please, if you have any question, drop me email anjum@ukversity.co.uk. So I'll try my best to get back to you as soon as possible. This lesson we looking the account for capital gain and the capital gain tax, which we can look around these, so please, again, whenever we have the capital gain, we have to pay tax on it. Gain from the revaluation of the asset, or when you sell the property, the difference, you have the gain, you have to pay the tax on it. So please, which we need to be look around the gain. Okay, so during our previous lessons, we discuss about, the type of income tax. We discuss about uh, savings, employment, dividend incomes, and NI, tax rate, and the benefit of kinds, which we already had a discussion about the car benefit and various other benefits which we mentioned in the previous lesson. So please, that's really we need to be look around when we do discussion on these, and we need to be follow the rules, accordingly. So today, please, we looking uh, is more about capital gain tax, which is chargeable gain, allowable person, connected person, chattels, vesting chattels, chargeable gain, and allowable losses, and gain and losses, arising from the disposal of shares, calculation of the capital gain tax, and personal allowance and rates, that will go through. Okay, so please, always when we start any activities, always good to be look around in term of scale 1 to 10. What is about, 1 is represent you have the very strong or not, whichever scale, so we can look around accordingly. That's, which we need to be uh, in that perspective. So please, that's we need to be look around in term of. So today we'll look around the capital gain and the current knowledge what you have here. So please, we already had a discussion about the chargeable gain, the companies and the individuals, which is we're doing the personal taxes more individuals. Okay, so please, we have the rates there. So please, follow the rates. We discuss about the personal allowance, which is 12,570 pounds. And we discussed those, in the previous lessons. We discuss about the resident in our lesson 1. We discuss about the benefit, the car benefit, if you have, that's the pensions, capital allowance, please, which we had a discussion. Allowances, if you have the new asset, and you can claim, the capital allowance. Rate of allowance is annual investment allowance, which is again up to 1 million, which we can, and worth of the asset. We discuss about corporation and the marginal relief, VAT, value added tax, we had a discussion about, and the penalties is in the previous lessons. We already had a discussion about different types of penalties can be, which can be charged on. So we already had a discussion about NI and the limit on NI, national insurance fees, and supplement instruction. So connected person is the purpose of the include the spouse, the civil partner, the parent, grandparent, and remote, such as in sister, the children, and further issues, brother, sister, spouse, civil partner, more relative as well. There are encompasses most of the family members, and the chargeable asset is include the personal possession which is worth of more than 6,000, any property which is not your main house or the shares, and those, held in the tax-free scheme investment, and the business asset allow the cost, and in working out the chargeable gain, you deduct any allowable cost, so we have to be look around each category of the asset and what cost is allowed, in terms of the capital gain. Private motor car, including the vintage cars and the gift of the UK registered charities, you can claim back. The personal belonging chattels, which is the scale proceed like antiques, the antiques, sceneries and all, If it's less than 6,000 is exempt. If it's more than 6,000, the prizes and the betting winning is normally free. Asset held under in investment saving, the schemes we can automatically UK residents. So please, always we need to be think about the residents and the residency rule in term of, so which we need to be pursue accordingly, and that's quite crucial, which we can pursue, because otherwise, we're not going to charge. Okay, so please, that's, which we need to be look around in the light of. Okay, so we can look around if you individual in the UK tax year less than 16 days, 46 days, and not in the UK resident any last 3 years or 91 days and work, full time abroad, so that's, the residency rules, please. Automatically UK resident test, so in the UK 186 83 days in the UK and only home in the UK and work full time in the UK, and sufficient ties, when we have, we can consider the person is liable for the tax purposes in the UK. So these, capital gain tax, please, which we can look around. The gain is in the charge when there is the chargeable, disposable, chargeable asset by chargeable person, and the chargeable disposal include the part of the disposal or the gift asset. However, the transfer of the asset, on the death is exempt the disposal, and the person who is inherited asset will be take it our at the value at the time of the death, so we can look around these. And individual pay, the capital gain tax based on the chargeable gain for the tax year, then the chargeable gain three essential: chargeable disposal, chargeable percent, and chargeable assets. These, which we need to be. Chargeable gain is the British term, which is increase and the asset value between the time it's purchased and the time it's been sold is becoming subject to the capital gain tax, like you bought a house and you sell the house, and the taxpayer are also allowed to reduce the chargeable gain by taking inflation into account, also known as indexation allowance, which can be look around these in the prospective of shares and some, so the lower the rate and the higher the rate of the capital gain tax. 2022 is 10% and 20%. The residential property rate is also unchangeable at 18 to 28%, and apply, rising the chargeable disposal of the property is not fully covered by the principal private resident exemption scheme. So please, chargeable gain is the tax, the lower rate are 18% where fall within the basic tax band of 20% is the higher tax band, depends the person, so these we need to be look around in the light of, and then the rate we need to be apply accordingly. So please, those we need to be follow, and you can look around the residential home is the, and the tax systems is the professional responsibility of the tax advisors, which we can, the national insurance contribution and the domicile, these are the points, we need to be look around in the light of. Chargeable gain and annual exempt amount, please. Taxable gain, those we need to be look around in the light of these, because otherwise we're not going to pay the correct amounts, we need to be follow the laws accordingly. That's, one of the crucial element which we need to be follow whenever we do the things, and calculate the tax, liabilities. Okay, so then please, so if you looking in the next lesson, we'll do some, the question more which we related to our assignment, which will that will be more focused. So please, we need to be think about. Okay, guys. So individual, the companies pay, the corporation tax exempt the person, charities, and the chargeable asset, any asset which is not exempt, and exempt asset, it can be principal, private resident, cash, motor car. It's not under that type of, the gain. the certain chattels which is see below like a horse and all, which bravery medals, gambling, lotteries, and these are national saving and investment, these, so these, which we need to be look around those perspectives. So chattel is the tangible movable property. Vesting chattel is exempt, expected useful life, which is 50 years, are, the caravan are greater than or less than those, we need to keep in mind, all animal encountered in the assessment, the vesting chattel and non-vesting chattel bought and sold, 6,000 or less is exempt, and the useful life is antiques, jewelries and painting, those we can look around. Please, we can say chargeable gain for the year, less current tax year, capital losses if you have, net gain you have, next annual exemptment amount, which is normally personal allowance, which we can, for the capital gains, 6,000, which we said earlier, less, the capital loss we have, the charge we have, and so on. So if we look, these in the light of, and we can exempt, and we can calculate the tax liability. So 3.2, please explain the difference between chargeable and exempt person, individual at the companies, and the chargeable asset is any asset which is not exempted will be chargeable. The gain on the losses can be example of motor cars, the individual bought in the cash, which we can look around the chargeable asset of the certain and chargeable disposals, sales and the gift, all part of the asset. So please, those are connected person can be a gift, like exam. So let's we look this example, please. Assuming your taxable income is 4,300, assuming the M and the have the taxable income is that, and we capital gain tax liability we want to calculate. So please, 36,600 annual exam limit in the previous year was 12,000. Now we have 12,570 pound this finance act, so please you can follow accordingly, and we can look around. The capital gain tax is the basic taxpayer is a 10% of the asset. So we can say all MN taxable gain from which we can, the basic rate is 31, because it's 37,500 was before, now we have 37 500, and if we have please any losses, then we can minus those, so assume the MN taxable income is there. So if we minus the taxable income, so we can say the 10% is the unused basic band, if we have, which we can minus as well, and again, which we need to be. And that's, which we can calculate the working. So like 10% first, the amount which we have 9,006, and then we have a 20% on the capital gain tax. So we have to look around the rates, which we need to apply accordingly as the finance act says. Okay, so please, if you disposal the part, the allowable asset, not whole, the part of it is disposed of. So you have to look around the A divided by A plus B is the proceed of the asset sold. That's, A, the market value of the remaining asset plus the asset, which we are the cost of the whole asset, which we can look around these, which we can calculate, and then we can use the formula, the compensation received are allowed, asset damage and all. So please, so each individual we need to be look around like chattels, the sale proceed is greater than 6,000. Allow losses based on the deems, the gross losses proceed 6,000. It can be exempt, or less than the normal computation, but again, uh, reach, so we can 5/3 if we have, the proportion of, so that's, which we can gross proceed minus 6,000 is exempt, 5/, times by 5 divided by 3, and then we can find, so connected person we said earlier, parent, grandparent, brother, sister, children. So I'll give you more questions on these, please. It will go through the next lesson as well. So purchase, number of shares we have in different times, we can do the taxation, indexation for these, the number of shares sold, the number of shares in the pool, and the cost to date, and the bonus issue if we have, because I increase the number of shares and that's, but received £100 free shares. So the gain purposes, we look around, the bonus shares are not treated as the separate holding shares, and they are treated as the acquired the same day as the original shares is related. Therefore, the number of bonus shares included in the share pool, but nil cost, that's which we can, because the cost not increasing that, So the right issue, the distribution of the shares, 1 in 3 and all. So cost 10. So we have, the cost acquired, and acquire 100 shares at the cost of 1,000. So we can do these, proportional indexation, the principal private residence, relief, which we can look throughout the period of the ownership, and 100% period of ownership again with the relief, so where between the period the absence from owner and calculate the gain of the normal and relief, which we can the proceed from the occupation and including the deans off, and then the ownership. So please, that's further which we need to be look around 18 months or so on, in 3 years, any reason the period. So those we need to be look around. Calculate the capital gain tax and by individuals, which we need to be look around in those perspective. So for the tax year 2019 and 20, Douglas, that does not have any income, so sold in peaks week, and the result is of the capital gain 18,800. So on August 2019, sold the residential properties, as a result is the total capital gain liability, which we can calculate. These we need to be look around in the light of. So that's, which we can calculate. So what we need to do, please, we can look around in this. The residential gain property is 39,500. Annual exempt limit, which is personal allowance, is 12,000. So we have other gain she had, which is 18,800. The capital gain, because if you're a higher taxpayer, is that's, which we need to be. So capital gain is, which we have total. So first look the total 18,800 and 27,000 is that's, which we have. So what we look, other gain we have as well. So we can look around first. 37,500 is the basic tax minus 27,500. So first is the 10% of the capital gain tax, and rest will be, which is 20% tax, which we have on. So that's we can calculate. So that's, which is 20%, and then 27,500 residential property gain, so which we do, and that's, 18% rate was in that year. So we can calculate, total tax liability is in that case is 7,100 supposed to pay to HMRC. So the annual exempt amount is set against, the residential property, which we need to be look around the prospective. So please, 18,800 is a 10%, then 18,700. So that's, is 500, that was 18%. And if that's, higher, it goes on the different rates. So the capital gain tax liability alternative be calculated as, so we can say the gain is 18,800, which is 10% of that. So if we do the remaining 18,800, which is 18,700, is 18% of the remaining, because the total was 37,500. So that will be 18, and then the higher rates, can go 88 800, because that's 18,700 you already minus from. So you have now that will be 28%. So total liability will be. So we can calculate slightly different ways, but it's fine. So we need to be as allowable. So although the charging and the end, in interactions, really we need to look around the annual exam, the brought forward capital losses, please, if you have the asset capital gain and the charges which we can deduct. So further example, please, the NIM has the capital gain is 18,000 and the capital losses. So please, we can minus the losses first, then we do the annual limit amount. So in that case, is no tax liability in that is due, which we can. The chargeable gain is 18,000, annual exam 12,000, the capital loss brought forward 6,000, and there won't be any tax. So please, I included the link for you here. Please further you can look around on our couple of handouts which is available on our Moodle page. So please, you can follow those, which that's quite good, to enhance your understanding about capital gain and the losses and chargeable gain and the connected person. That's, the key information. Please, we need to be chattel exempt asset and annual amount. So please, 12,570 is the personal allowance. Look around there and takes, those values 6,000, please. If it's the less than that or greater than that, if the losses, please, up to 5 years, we can go back and forward as well, which we can settle the tax liability. That's, which is quite crucial, which we need to be carry on looking, and that will help. So we have this couple of video which we included, please, is quite good, and the quiz which I included as well to enhance your understanding, please, and follow the tax, allowance or the tax rate accordingly, because that's, is one of the crucial things which we need to be look around in the light of, the tax rule, because every tax rules carry on changing. So please, don't be, and in please try your best, to attend the next lesson, please, which will go through the assignment discussion, and have a lovely weekend. Hope, speak you all during our next lesson. Thank you. Bye bye.